This is Justin Pulitzer. This is my weekend review video for Sunday, March 19th, 2017. Good amount of stuff to cover. We had a Fed meeting this week, a new Fed range that we can trade against. Going to start out by talking about the 7 market keys, get into the major market indices, and then talk about some of the momentum stocks that we've come to know and love, or love and loathe and whatever. Anyway, if you're curious about my macro analysis, after this video, or if you want to skip, you can take a look at my Periscope, sorry, not Periscope, but YouTube Live from this past week. And I talk a lot about the Fed in there and my interpretation of them. So in the interest of saving time, I'm going to skip that for this video. If you're interested, just go back and look at the beginning of that last few video. The opening few minutes covers it. Anyhow, let's jump into it. We're still in purely directional mode here. VIX is at the lower end of the range here. It's been kind of stalling out close to just below 13, and we've kind of been ping-ponging below that range. We had an attempt here to start to make some higher lows, but that really hasn't panned out. I would say that the risk and volatility here is either sideways to up. I don't really subscribe to the single-digit VIX thesis. So if we can start clearing 13, get over the 100-day and the 200 MA, then there might be something to talk about. But until then, VIX is just low and choppy. The dollar. So ICE apparently doesn't want to provide the DX anymore without paying a fee. I'm not really that big of a dollar trader, so I'm not game for that. But we can look at the Dixie. The only thing I'm not so thrilled with the Dixie is it tends to be a little Euro-centric, if you know what I mean. But for our purposes, it's just fine. The head and shoulders setup here is still in play and seems to be breaking down. We're below the 50 MA. So I'll say this: if you're a dollar bull, or if you want to, I don't know, if you want to play short the dollar. I guess I'm okay with that play here on any bounces now, like to the 50 MA, 50, 100 MA confluence, but it's now settling in below those levels, and to me looks like it wants to go a bit lower. This was the Fed day range. Anything inside Fed day ranges to me are kind of no touches, unless you, of course, are playing row against a moving average. But below those lows are still vulnerable to me. If the dollar were, for example, to somehow find the courage and strength to get back up over these kind of double tops and this right shoulder, I would say that the pattern would be invalidated and the dollar would go a heck of a lot higher. The Fed is talking kind of outside of both of their mouth, outside of both sides of their mouth, and they want to raise rates, but they don't want to cause a dollar surge, and I think they kind of walk that fine line with I've been using this line of between lunacy and being a maniac. For those of you who haven't picked up on that, that's a little homage to the Ultimate Warrior, big WWF fan back in the day. Anyway, they seem to have walked that fine line, and the dollar seems to be softening, which is good. I guess that's safe for the for equity markets, right? TLT, the bonds. How often do I say that Fed days tend to kind of mark the low in the pattern? This is our Fed day range now. You can trade against the extremes. You have kind of 2 inside days. Anything above that high, I think, would throw back to this sort of 50 MA and old uptrend line. This was a classic look below and fail. Once you get back, once you have one of these days where you are on the lows, I mean, I was thinking that we might see a little bit more follow through to the downtrend line, but once that didn't happen, over the high, it was back to being long, and now we're kind of roughly hugging the 10-day MA. And I'll say this for TLT: anything above 117.43, you can still be long. Below it, probably you want to be short. Above 118.83, I would be long and or adding. Very simple. HYG, how prescient that call was that I said I didn't think we would have a complete collapse here without at least a throwback. Remember I said it was sort of the same as this and it is playing out that way. It seems to be stalling out a little bit at the 50 MA, but for me, HYG doesn't necessarily have to be in trending mode. It just can't be in one of these kind of collapse modes. When you start getting that situation, it becomes problematic to the markets because people start thinking credit crisis. And I think a lot of people started getting hopped up, and I basically made the call that I didn't think we were in a credit crisis here, and I still don't. That's just not the case. You know, everyone keeps wanting to see or afraid to see 2008 and 2009 again, and if anything, growth now, policy, fiscal policy, Fed policy, it's all accommodative. It's not going into a credit crunch. Interest rates, yes, the Fed is hiking rates a little bit, but it's coming off of such an absolute low basis, and they're going so slowly. I just don't see that type of an issue. Remember that Greenspan had hiked rates 17 times in a row in 17 consecutive meetings and brought rates to 6%. Fed has told us they're normalizing it like 3%, 3.5% tops, and that is basically a lower for longer and a kind of a new ceiling to their rate policy. That being said, we do know that the Fed is going to be changing over the next couple of years. Trump will be putting in his people, whether or not they keep on the Bernanke Yellen doctrine is anyone's guess, but it seems to me that rates will be low for a while. This was a look below and fail on the 200 MA, back up to 50 MA and stalling a little bit. I guess you could use the 50 MA as your gauge. Anything below there to me is a little bit vulnerable. Back above to me would be firming. I wouldn't be surprised to see something like this rally up to kind of have like a double top situation here. This was the old trend line that broke down. Often when trends are broken, the back sides of them are retested. So if you want to put in a buy stop, I think you could do it up over 87.53. If this were to pull back, you don't want to see this really get much below the 100 MA. You can see, look, this was where it was struggling here, where it was roughly, we broke below. It kind of was trading on the wrong side of it, but then the 100 MA kind of caught itself. Here we were kind of in pause mode. Now you want to see that support, in my view. If anything below there would be a little bit more vulnerable. You can see we kind of were below the channel, and now we had this firm bar back up into the channel. Anything, though, if we were to negate this bar, the low here of 86.32, I would be back more interested in a play for the short, somewhere maybe down between 85 and 84, and in that area I would think that it's probably a near-dated short out of the money put, or a just a flat-out buy for a bounce. You can see when this reversed here, it spent a couple of days in the wilderness before going higher, back down. I mean, this thing tends to trade a little bit choppy. But the 50 MA to me is the most important, and as long as we're below there, it's still a little bit iffy considering we had a look above and fail. But the context of which is I don't think it's sort of a big deal. The oil. So oil is doing a check back here. Let me zoom in a little bit further. You can see this box. This was the range that I was looking at. Roughly the low end of the box was, let's just look at the properties, the 49.61 and 55.24. Those are the extremes of the box. Here was a basically a hammer, 200 MA held. Here we got basically the 50 MA held, and then now we have excess with sort of a secure low at the 61.8 of this range. If you see where I'm saying, from this kind of pullback low, not the the exact low, but really where the rally and pattern changed. So here we came down. Now we checked back. We had a bit of a look in and fail, and we're trading a bit lower. So here's what I'm watching to see. If you really are jonesing to short this, I guess you could use 49.71 as your stop. The 10-day is basically right there on this like look in and fail bar. But what I'm looking more curious to see is if this maybe like pulled back mildly, maybe even to just to the 200 MA, or just kind of chopped sideways and then went. That to me would be more bullish rather than just kind of like plopping in and then maybe coming back out. So we have to see the character of the pullback. Is this going to be sharp down? Is this going to be like dribbling sideways? Or is it going to just be kind of like a straight up move? My guess is it's going to be like this kind of dribbling sideways, and we might be caught between this like low and the 200 MA. If we were to get back below the 200 MA here now, then I would think things look a little bit more bearish, and we might rotate all the way back down to try the channel low. Remember I said I thought the 61.8, between the 61.8 and the channel low, kind of as the max move would be the support, but I was thinking 61.8. It's also the 50% of the entire range, and kind of like where this big breakout day really kind of picked up. So this area to me is very key. You can see we're trading here. We're in Sunday. Futures are open. So if you, like I said, if you're aggressive, you can use Friday's range. The extremes of that, either above it as a long or below it as a right or right out short, for maybe for a little pullback. Exxon, oddly enough, Exxon always kind of shows the way. Exxon, I had said, was showing a lot of relative weakness to the commodity, and I think that it led the commodity lower. It also tends to lead the commodity higher. You had a couple of look below and fail days, and now are back up above the 20 MA and 10 MA, which is okay. I could see this thing rallying to the downtrend line and to the 50 MA, roughly around where this kind of range high is. But if you were to lose these lows, I think that this would maybe continue dribbling down on the channel low. And I mean, worst case scenario to me is sort of the 61.8. But I started selling some puts in Exxon, and I'm kind of thinking that maybe, just maybe, this kind of can form a bit of a rounded bottom. It's moved a lot quickly. It's never checked back to the 50 MA. It would make sense for me for it, particularly if oil is firming or at least stabilizing, for it to have a 50 MA check back. China. Interestingly, China has been firming. Look at this. You have a bit of a wedge here. The 50 MA is now bending back up, right? Look, it was sort of like the resistance staying above it was unsustainable. And now it has been holding. So as long as that kind of holds, I think that the market will kind of be okay. A couple of little caveats. The upside, look where the old up channel was. It kind of stalled close to it. So if there were to be an up move, it might kind of stall out there again. But I would think that this this might be trying to turn the page. You know, this does tend to trade gappy, and you have these up moves and then kind of steep down. But now we're making higher, kind of higher lows, and starting to make some higher highs, so I'm kind of all right with maybe buying the dip near some major moving averages again, particularly if it were to get to the wedge low. One thing that I found interesting is this BIDU. It's still in this triangle formation, and it really needs to snap one way or another to really get me interested. But I will say this. Let me zoom in a little bit. Alrighty then. It had a lot of opportunities to break the 200 MA, and I think this was a squeeze up. You have a bit of a topping tail here, and we stalled at the 50 MA. So I think if you want to play like right or right out, if there were some strength early next week, you can buy it up over the 50 MA, or if you want over 177.55. And use a move below this low, this 176.18 is maybe the stop, because that's like the 50 and 20 MA really are right there. But I'm really, for me, more interested in watching to see when this triangle kind of snaps, and then I think it'll be a go with in that direction. The problem I think we've had is you've kind of like come up from the bottom or come down from the top, and it hasn't really had the opportunity to really break. So I'll say this. If we were to lose the 200 MA, I'd be interested in a right or right out short for a move down to the low. And if we get back up above the 50, I think there could be a trade back up to for the gap fill and a move to the high. So basically, I want to either be short below the 200 or long above the 50 MA. BABA also looking a little bit better, although this stock never really makes it easy. I currently don't have anything on in BABA, but I do get a lot of messages from people who have stuff on in BABA. We're above the gap high. This thing has just been really kind of choppy. I was actually looking to sell some puts this day, but it kind of snapped back up on me before I got that play in, and I'm kind of okay with this, with selling like out of the money puts at like the range low here, like 99-ish or below, because that look is sort of a I don't love that this is a trend because there's no another point from a later time frame. This is sort of still the same time frame, but it's below the 50 and it's at the channel low, and it's basically the range low. So this to me seems like it might be choppy, but it seems like it's grinding higher. Famous last words with Baba, but seems okay. The 10 and the 20 MA here, if you're long, moves below it have been unsustainable. If you start getting moves that sustain below here, I think you can stop out or try short. So that's my view on the Baba. IBB, very key here. Keeping an eye on this, and the 50 and the 200 MA have played kind of important roles. We're well above both of them here. This had a bit of a gap down. So you had these like kind of look above ranges that failed and now a gap down. I'd probably get interested if this were to have continued weakness to either try right or right out at the 50 MA, but more than likely at the 50 MA, selling near dated out of the money puts at the 200 and the channel low, like same week's expiration. That to me would be a high probability trade. If you want to play this short, you could buy like 50 MA puts and sell 2 times out of the money down near where the 100 and 200 day moving average has the confluence. If you're a Momo player, you could just set your buy stop for a long above the highs. So that's my view on the IBB. What led us here, it seems to have been a bit of a sell the news, and I believe this was a bad tick because when I look intraday, I don't see this this kind of wash down. But the 50 MA to me is the key. As long as this stays above the 50 MA and like this breakout, it's still okay. I know a lot of people are kind of been very skeptical about the financials, but I'll say this. Some people are saying, oh, you know, if the Fed isn't going to hike that much, that these can't go much higher. For me, the story really isn't so much the Fed hikes, although having that wind at your back is good. The story for me is the deregulation, because these were relegated to be utilities, basically. They paid dividends, and they couldn't really do what they did. And now they're going to be back soon, right? They could start making money again. And the deregulation to me is good, and plus you have rates going higher. As long as rates are going up and as long as deregulation is on the table, I like the idea of buying this on dips. XLF, like I said, somewhere between, if this were to just continue down, like a little bit of sell the news after the Fed, a little disappointment, right? This was like this kind of gap up and dribbling lower. I'd probably be interested in either buying it at the breakout point, but more than likely at the breakout point, I'd be looking to sell some out of the money puts at sort of the range low. Because if this were to come all the way down here without any break in the move, I think that it would be met with buying. So that's my view with XLF. If you are looking for like a long entry on momentum, just wait for the trend line to snap, right? We're making some lower lows, some lower highs, no rush. Just wait for the trend line to break, and then it'll sort of be like the car passed, and you can put the goals out and play some street hockey. Speaking of financials, I do think JP Morgan is at some point destined to see 100, but it may be destined to see a little bit lower first. This was the breakout area. Look where the 50 MA is and look where the channel low is. I'm still a buyer of JPM on touches to the 50 MA until they stop working. Traders do what works until it doesn't, and that has been what's working. Goldman is basically right here. We might get a move below if there is weakness here to the backside of the old up channel line. Like, look, here you broke out. Here you tested it, and it rallied to a new high. It may get tested again. I will say this, in my experience with, and I had called for this and said it was a buy, and it turned out to be right. I will say this. The second test of the backside of the old up channel is normally not as quote-unquote safe as the first one. So this really has to be done with care. I don't want to say for lack of a better word, but You know, you have 100 MA coming up. Ideally, the ideal scenario would be it would be at the 100 MA, because look, the 100 MA here was a lot of support. It should again, and if it coincides with a range low and I would say a range middle, because this became the range low, but anywhere down here between this area and the 100, I think the 100, at least the first go round, would hold in the old Goldman Sachs. Let's talk about SPY. So there's a couple of things I have to caveat with regard to SPY. SPY looks a lot weaker than it actually is because it went ex-dividend the other day. You can see here that it was it's below the Fed day low. But if you look in the cash, which is always, truth be told, the most important, we're not below it. And we're not below the 20, and we're not below the 10. I would look to the cash right now until kind of SPY rights the ship as your gauge. You could either use ES, you could use the cash, which is of course the XPX, to be the gauge. I see a couple of interesting setups here. The 20 MA has held it here a couple of times. Any break of that, really of the Fed day range, this is to me the most important. We've spent a couple of days inside the Fed day range, and the more time you spend inside the Fed day range, people are either adding to positions long or short, so the break becomes more violent. I either want to be long over the high or short below the low, and that's all I have to say about that. Sort of a Forrest Gump quote. This week in SPY, the expected move, of course, if it's down, this could always be higher. I always use this as sort of upside limitation caps when things are strong. By the way, SPY has never retested the backside of the old up channel, and that's roughly near this low. So this is, to me, where the rubber will meet the road. I do at some point, like I've said, believe that SPY will see a 50 MA test. The first go round, IMHO, it is a right or right out buy, particularly if it coincides with this sort of other channel low. Like if this were to just come straight down, if we were to like have some kind of correction next week or the week after, I'd be interested in the 50 MA. But that being said, it's all about the Fed day range. The expected move this week is $2.54, which would imply $239.57 or $234.49. Interesting levels, to say the least. IWM showing some grit, held right where she needed to. Look at this. Hammers with look below and fails. This one closed slightly below, but then the Fed was to the rescue. Look at this. The 50 MA stalled, now back through it. I'm kind of okay with being long as we're above the 50. Below it, to me, would be a little bit more iffy. But what's interesting is IWM is trading above the Fed day high. And small caps tend to lead, and they are looking okay. We're above the 20 MA. Look where this kind of breakdown came from. It's stalled here, but still above the 20 MA. If you're aggressive, you could use Friday's range, at these 2-day range here, as your bogey, long above or short below. And caveat being, though, that the 50 MA there is kind of the bell of the ball and is going to determine the move. The move this week is supposed to be $2.09, so 140.55 or 136.37. The Qs, the curious case of the Qs. We're getting very, very close to the 1.618 Fibonacci extension that I thought we might get to. Qs are just chopping. You have a Fed day range here, which is basically at the 10-day MA. So I'll say this. Above the Fed day high, you could look. But what was amazing is the Qs made a new all-time high. The other ones have not yet, i.e. the, did IWM? Let me just take a quick look, see. I don't think so. Nope, not yet, and I know for a fact SPY has not. But the Qs, the most aggressive of the speculative orgy that we're witnessing, is making a new high, which to me is key. So again, Fed day range is key. I think if you want to be below the 10-day and below this day's low, you could try a right or right out short, with the caveat that the 20 is right there. So what would be interesting to what I think the first go round, the Fed day low will probably support and be a buy for a bounce, particularly if it coincides with the backside of the trend line and the Fed day low and the 20 MA. So You really need to see this thing get convincingly below the Fed day low and below the 20 MA. That to me would be a bit of a short. But I'll say this, Apple, which has led us, has been a little bit, I don't want to say soft, but it hasn't been, I don't know. It's been all right. It's fine. It's fine. Basically, it's fine. This pinned, a lot of people were kind of like, oh, why is Apple so weak on Friday? I think it was just a pin job, meaning pinned one, basically 140, 139.99, which is close enough for government work, 140 for the OPEX. So what are we talking about here? Remember I talked about this day. This I said was a bit of a look below and fail. I thought at the very least we'd see the top end of the range and probably a push above. That has played out to the tick. 100 MA here, I'm sorry, the 10 MA here has been key. You have a 20 and a 10. As long as that kind of holds, I think it's like okay. If you want to short this sucker, I think if you were to snap the 20, you could try it and then add below this low, which was 137.05. And where would my first target be? Anyone? Bueller? That's right. The backside of the old up channel, which would probably coincide with the 50 MA. I'd be an interested buyer, at least for a bounce to maybe a lower high or maybe a higher high at that area. I will say this. Apple does have some earnings coming up. These months leading into the fourth quarter when the new iPhone come out don't tend to be the best for Apple. Unless they have some kind of new launch that we don't know about, there could be. It's very possible. But I'll say this. I don't want to get into that kind of mumbo-jumbo here. I do think it's okay if you want to stay long, as long as the 10 and 20 MA holds. If those break, you could probably stop out or try short. Below this low to me would be a move down, an absolute great short setup. Microsoft 50 MA has been the big dog, right? Let's zoom in. Just stick with me. I know I got a lot of lines on this chart. This is really the big channel. I should make that even stronger, right? I make this make it like a 4. This is, I think that's the big channel. I don't want to speak out of turn here. Let me see. Yep, that's the big channel. So let me zoom in again, now that we have that confirmation under our belts. You can see where this is kind of riding the lightning here, right? It keeps coming down and then looking above the channel and then kind of coming down. 50 moves below the 50 MA have been, or to the 50 MA have been bought. As long as the 50 MA holds, I think that this could still be, just play that game, buy the 50 MA or what have you. You might want to wait to see the tail, but any closes below the 50 MA, particularly back-to-back closes, would be a little iffy to me. I put this range low in here. If Microsoft, let's say, were to kind of trail back here from a lower high situation, and you have a 100 MA confluence here, I don't expect this range to break very easily, but if it were to break, it would be a short. And it may be a very big one because you've spent so many days consolidating here and you'd have so much disappointment, right? All these people, all the hope. And when you break ranges, that's where hope goes to die, right? Very cheery here. Where would I expect it to pull back to? Maybe 61.37, maybe even the dot-com bubble high of 59.97, right? It could even be like a doubling, at first think to double the range. It's not a very big range, but that could take us a little lower. 50 MA, though, is the key. If you're aggressive, you could use Friday's kind of doji or 20 MA here. Like, see all these cattails here, basically at the 20 MA. That, to me, is going to be a first move, but 50 MA to me is really the key. That's how I'd probably play it, or I should probably say that's how I will play it. Amazon is in a wedge. I will say this. I'm pretty bullish on Amazon. I think it's probably one of the best. It is, I think, the best retailer of all time. Very, very impressive lineup that they're doing. They've really taken over online. It's established an amazing brand. And yeah, I think it's looking okay. It broke out of the old high. It hasn't really done it with gusto. It's just been flagging. Nothing wrong with that. I'm looking to either be short below the kind of the wedge. You can see all these cattails that, to me, if we were to get below this double bottom here, 47.11, 47.55, whichever way you slice it, the stock's an $800 stock. A few cents aren't, a couple dozen cents aren't going to matter. If you lose those lows, I like it short to the 50 MA, maybe to the range low. Above these highs, I think it will press on to see new glory, new all-time highs. So you could buy stop at over 857.35 in my view. I think it would go. Been hoping for this thing to have a larger pullback for a while. It just doesn't do it that often. Facebook is just kind of dribbling higher. I think the real risk here to me is like some kind of gap down, like that starts the violence down. For some reason, I've been bullish and I've been playing it so, but I'm just it doesn't feel as clean as it once did. It has that not so fresh feeling to me. Look at this. All these kind of look aboves, and now it is a little bit above, but it's so many days up. It's so buried, overbought. I would be a buyer, though, if there were ever a big pullback to kind of like the breakout point, which would coincide with a 50 MA. I'd be into doing that. Shorter term, the 20 MA and the wedge low is a buy the dip point, and it will be until it's not. So I think I've said my piece on that. Snapchat. More like snap the neck of buyers, right? So I will confess, I am nibbling down here a little bit on the Snapchat, as crazy as it sounds. Why? Because everyone hates it, and when everyone hates something, they hated the IPO. This, to me, I predicted this, right? I said I thought we'd have the move up, and then we'd have a pullback down, and then it's a buy above the high, you double the range, right? You have a hammer here now, roughly. Everyone thinks 17. I've sold some out of the money puts roughly for these strikes. If it really gets cascadey here, I'll just take the small loss, but we'll see. We could wait for the trend to snap. Like if we were to move up above Friday's high, 1985 plus, like above there, I'd be interested in adding to the long, maybe for a move to the 10 MA quickly up to 21s. Below this 1890, maybe it does get to the 17. I think there will be a lot of interested buyers there, at least for a right or right out play. Longer term, I'm not really super duper bullish on Snap, but this is playing out how IPOs do, and I do think at some point this will at the very least see a rally to some kind of a lower high, if not take out the old all-time high. Their business isn't doing terribly. It is slowing a bit, but I don't believe it is a Twitter. I think that they are much better than Twitter. So a lot of prominent investors in Twitter have finally thrown in the towel. We're below 1569. These were like look belows and fails. I had said above 16 was a long. I tried it and was unceremoniously stopped out on the break of 15.5, whatever. No biggie. This, to me, until you get back up above 16 or the downtrend at the very least, could see the all-time low and maybe see even lower still. Twitter is just not acting well. They really have nope. I mean, maybe if they fired some of those. You see GoPro this week fired a bunch of people. I'd love to see Twitter fire a bunch of people, like diversity directors. I never have seen a diversity director responsible for EPS beats. So let's clear house on those diversity directors. 50 MA, to me, as long as this holds, the path of least resistance is up. Here you have maybe a mini secure high. If you were to lose the 3-day low here of 143.23, there might be a quick shoot down to the 50 MA. So, yeah, as long as it's over 143.46, to me, it's all right. If you were to lose the 3-day low, I would be interested in a quick right or right out short for a pullback maybe to the 50. If it gets up above the all-time high, Lord knows we could see the 1.618 fib extension up to 166s and measured moves up to 164 to 168. So Netflix seems to be executing well. Their pattern is okay. I would love if this thing were to have some kind of a bigger washout to fill the gap and get close to the trend line, where I'd be looking to sell some out of the money Puttaruski, McFaddies, Aroonies. Can tell it's been a bit of a long weekend. St. Paddy's Day and all, although my St. Paddy's Day these days isn't all that eventful. I'm more of a green tea than a green beer type of guy these days. Wasn't always so, but it is these days. Google came up from the bottom, broke out of the high. A little consolidation. I'm still a buyer of dips on this kind of like new trend we've had, which is roughly the 20 MA. So any pullbacks to there, I would be interested. That's roughly the breakout. I don't know that I'd be chasing this breakout higher, but I do think that Google is probably a buy the dip stock at this point. Alrighty, Tesla. Although their summer quarters in Google aren't always the best, so I don't necessarily know if you need to be a big-time chaser in that. 50 MA here. We had a couple days below. You had some look into the below the trends that didn't really hold well, and then they did their secondary, right? And then now the stock is up. 265 is a very key level. Look, it wasn't sustainable up here. Up here, kind of held, and now we're back below. You need to clear 265. Anything above 265, I believe, is a long, potentially up to 306. Anything below 265, though, still remains a little suspect to me. I really was kind of hoping this would wash out to the 61.8 and had a 200 MA test. Any weakness to the 200 MA, I believe, is a buy. Look where it resisted here. The 200 MA should be support now. So I like either 265 or up, or play for a, I'd be, or buying down at near the 200. If you were to lose these double bottom lows now, for example, 242s, then I would be playing short for the move to the 200 MA. So that's the Tesla price line. Price line is a bull stock. I remember when this stock was like single digits at the end of the dot-com boom. Don't I wish I could just go back and tap myself on the shoulder and be like, yeah, just load up on tons of price line at $3 and just hang out. Anything above 1748.39 is bullish. This is probably going a little higher to close to 1800, which is the 1.618 Fibonacci extension, and it may even overshoot to the channel high. So I think price line is a buy the dips as long as 1748.39 holds. NVIDIA. So I remarked last week that the NVIDIA chart, if you look at it with these kind of like double tops, looks a lot like two other stocks that I've seen in the past. One was Ambarella. Look at this. You had these double tops, an attempted rally, and then the thing got itself pretty badly whacked. Also Netflix, which had, where was the area where icons sold? I want to see something. See, look where, I want to show you, as crazy as this sounds. This doesn't go back long enough, 4 years. Wow, I can't believe how fast time is flying. You had like this move down and then like a move up and a move down, but I guess not so much Netflix. It's more like Ambarella. So let's forget about this for now. NVIDIA. So I'm a little cautious on NVIDIA. You had to look below ranges that failed roughly close to the 100 MA. Look where it held all the way up was the 50 MA. We broke through it like it was nothing, and now we're right back to it. And you're basically to the start of the gap. So I'll say this. Below the 50 MA, if you want to try right or right out short, be my guest. Anything above the 50 MA, again, you either want to be flat or long. If we were to lose these 99s again and then this 100 MA and this range low, at some point I do think primary trend will get tested. That will likely be a right or right out buy. I have to move that a little bit more. But I suspect that we won't get much resolution on this until their earnings. I think this is just going to be a little choppy. So for now, we'll use the 50 MA as the kind of the pass don't pass line. Above, I like it long. Below, I like it short. And if we were to basically lose these double bottom lows, I would be liking to short it even big league short. AMD, I get asked about this stock a lot, and honestly, I had no intention of playing this until I saw how many people were asking me about it, and I was like, all right, let's do it. Let me show you something. Even before this oval has been here, even before this move up, I had said I thought that this had the potentials to be a head and shoulders setup. What happened on this day? Does anyone know? Bueller? That was when it was added to the S&P 500. And the next day, it closed near the lows, and the next day it gapped down. You had double tails at the 10-day and the 20 MA, and another consolidation day. And then when you lost these lows, that's when I put on this this short play. I'm short I think a longer dated 17 call. It's really a little too long. I may have to adjust this. We'll see. Maybe I'll just do shares. And then long a put spread. I forget the exact setup. Maybe I'll post it this week. But the point is that you have opposing tails here. And once you lose these, to me, that was an entry to a short. You're also below the 20 and the 10 MA. Where am I playing to for now? Just the channel low and this reference low and 50 MA, which has been so much support. I don't know if I'd buy it there. Probably the first time, because I do think that there would be some type of a bounce. But head and shoulders is a head and shoulders and could be a little trouble. Where would I stop out of this trade? Probably if it's were to get back up over this like 14-15 for sure. I would be I wouldn't want to be involved in that trade anymore. So that's my story with AMD. I think selling out of the money calls above the old all-time high here, or whatever this range high here of 15.55. Anything above there to fund a put spread to me makes a lot of sense. CME, another one that I'm looking for a short entry. So look at this setup. It's a, I don't want to say it's a thing of beauty, but it definitely is very visual, and I bet you a lot of people aren't really watching this, and I think that would lead to some great fortunes. Look at this. You had this really big up day. The next day came down, and now you've just been building inventory long for the most part. Because it's been kind of drifting up after this, inside this candle. Look at this low. This is 22.79. This low here is 22.67. If you lose these two lows, particularly with all this now inventory built up below this low in particular, I think you'd get a cascading effect to at least the 50 MA and maybe even the backside of this old, I don't even know what this old thing is. Let's see. Old channel. Yeah. So you'd get it at least it moved down to the 50 in my view. So I like the idea of putting a sell stop below these double lows for a right or right out entry. That's my scoop with CME. TWLO. What a junker, right? I hated this stock. Remember I talked about selling this here at 2 times the range and basically saying never look back. I think that I drew in a downtrend line, and I had talked about one last play in this thing long, but really this was it. A lot of people gave me criticism because it went higher. I'd love to see those people now that the stock is so much lower. Oddly, down here, I don't hate it as much, and I have been playing along with some varied success. I had been short puts and added on this day where it broke the trend. It came down, held the 50, which kept me in it, and then this day came up, and I just, as it was drifting down, I realized it was not behaving well, and I closed the ad. So I still have some short puts on. I think they're like 28 strike, and they're probably a little longer dated than they should be. It's held the 50 MA twice here. I don't want to be long if it's below the 50 MA. So if you lose this double, basically this hammer low, I'd stop, first of all, I'd stop out of these short puts, and I'd probably short the stock for a right or right out play, at least down to the reference low here. If we were now to get above these double highs, I'd probably add to this long again. I'd resell the extra put or whatever, extra puts. It's not a very big position for me, but 50 MA is key. CF, I get asked about a bunch. They have a decent dividend, I believe. They're at the 50% fib. I was really looking for the 200 MA or the 61.8, which was kind of the breakout to sell out of the money puts. If this were to meander down there, or what I'd be looking to do is to sell trend line out of the money puts 24 strikes, which is roughly the 78.6 of the range. So you have a 78.6 and a trend. I'd be interested in selling those puts anywhere into like the 200 or ideally the 61.8. I don't know if we're going to get it. It seems like it's trying to break trend here. It's not above the 10 MA yet, but I think you could use a move over Friday's high as a row long, probably at least to the 200 MA confluence, maybe even the 50. We'll have to see how that plays out, but that area to me, you could see the 100 here was some resistance. Probably would be, again, considering look where this broke down from. So that's what I'm kind of thinking. Like, this bounced. This could just be a little bounce, but this area to me would be more interesting for a longer, more serious play. I talk about PayPal a lot on the stream. I don't talk about it a lot in the weekend review videos. This is one of my favorite stocks to sell out of the money puts in. I've been doing that for a while now, and it has worked quite well. It seems like there's a bid here in this. It just seems like it's under accumulation in my view. So any pullbacks to like trend, which is like 40 now, to me seem interesting. I do think that this could get up to 44s. And I had said a while back I thought 46s. I still think that that's in play. It is kind of trapped in this progression line that's held it. Here we had some time over it, but look, you had one day gap up, and then it sold off straight. A look above, it couldn't go, and then it came down pretty hard. So I don't necessarily know if you want to chase, but I do like selling puts. For me, that's the better way to play this. SHAK, I'm back into it. I had been out. I got out ahead of their earnings, and that turned out to be prescient. I'd said I thought we would get a move to the low. And I said I thought it would be a buy even if it was a look below, which it was, multiple days below, and you couldn't get any more sellers for it, and you had a move back higher. Why? Why couldn't this break down? Look, you came basically all the way here. Let's just say this is kind of the top of the range, roughly, straight down to the lower end of the range. It needed to dribble a little and then go, but it didn't, and now it's back up. So if we were to lose the Friday low, 31.25, I'd probably stop out of it because I'm cool with this pulling back even as much as halfway into the range. If we were to lose the low, though, I would just chalk it up to, this thing being a piece of junk and getting out of it. But I don't think it's a piece of junk. I think it's kind of just been, they came public. It was too expensive. They sold a lot of stocks. You had a decent amount of insider selling, I believe. I mean, I'm looking for a move back to where kind of this breakdown was, and the 20 MA, maybe 50 MA. But yeah, I'm all right with some short puts here. So far, it's been working. Not one I talk about a lot. Volkswagen, the Farfignugan, right? Anyone ever see Love Potion number 9? Anyway, roughly getting close to this trend, although we have spent, you can see here, you can see we had this channel low. We spent some time below it, but now we're back into it. You have a 200 MA here. What I'm looking for, and it doesn't have options, so I can't play my old short the puts routine. It's the blood and glory routine here. Is either buying a little here near the 50% fib, although we've been down here so many times, I don't know if I'd really want it. But look, this was really the breakout, so I'm okay with buying a little in this area, but then adding more as a conscious effort somewhere near the 61.8 and the trend, so somewhere down in like 28s or near 27s. I do think that this is destined to go higher. And I'm cool with a right or right out trade right around where the breakout was now that we're coming back down after so many days. So yeah, I'm looking to kind of add that long back on. I had been long, and then I had sold it a little early. It went even higher, but I was out, I think, on one of these days, and then it went higher, and I was a little pissy about it. But now that it came back down, I knew it was the right decision, and whatever it is. So that's the Farfignugan. Johnson & Johnson. I can't even believe I'm talking about this stock in a weekend review. Look at this. This was a trend. We're getting close, right? And we're above the highs. I think everyone thinks it's kind of smooth sailing. I'd be interested in trying a right or right out short on that kind of progression line. Look at this day here in particular. This is a big emotion day. It was the Fed day. I don't really use Fed days for individual stocks as I do the market, but it's a big emotional bar. If you were to lose this low, I'd probably be interested in trying a right or right out short, considering we spent a few days in there. I'd love this to spend more time and then kind of break it, and then maybe get some kind of a decent pullback in this thing. So it's a bull stock. It's tough picking tops. But if you were to lose this low, I think it's a right or right out entry, or somewhere on the backside of the old uptrend line. Another one, this Clorox. I said I thought that this double top or a move above would be interesting, particularly if it came up from the bottom, which it is, although now it's consolidating, so I don't necessarily like that setup as much as I might have if we kind of just went straight like we did in J&J. I don't necessarily think that this needs to be chased near all-time highs, but if this came down to trend or one of the major market indices, particularly the 50 MA, that's really where this broke down from. It's now rounded. I'd be a 50 MA buyer for right or right out. If you want to play put spreads, you can do it with, the lower strikes being in those areas. Anyway, I think we could end there. It's been going on a while. That's my story. I'm sticking to it. If you liked my video, hit the thumbs up. Please leave some comments. Help me help you make the videos better. If you like my video on Twitter, please favorite it and retweet it. That's always the best way of saying thank you. Have a great rest of your weekend. I'll be looking to do YouTube Live likely on Wednesday or Thursday. I'll try and shoot for Wednesday. Cheers.